Good afternoon, everyone. This is Christy from Ahn Co. It's Thursday, October 10th. I'm going to go over the markets. There was a USDA crop report today. It was unfriendly corn and wheat and friendly soybeans, though soybeans still closing down a quarter cent on the day just because it couldn't fight off that pressure from both corn and wheat, as corn market was down 14 cents on the day, and then wheat complex anywhere from 5 to 10 cents lower on the day as well. So a lot of pressure showing up, and you did see cuts to your carryout levels for corn, but just not as much as the market was expecting. You have built a lot of premium into this market for the corn after the stocks report, and really it just kind of took the wind out of a lot of people's sails, and they decided to step out for a little bit as we were towards some of those upper price counts. USDA did choose to increase corn yield, which a lot of people are arguing is not going to be sustainable, and then cut pretty aggressive on a couple demand items, including ethanol, after President Trump had said that he wanted to increase 1 billion gallon usage on the ethanol mandate. And so there's a lot of things that can work their way out of here and give us a smaller carryout. But for now, we are dealing with just shy of a 2 billion bushel carryout in corn, and that's where you got that little bit of a pullback here. The wheat complex really didn't have anything too unfriendly, but it really didn't have anything friendly either, so it was a follower of corn. But when you look at soybeans as a whole, very friendly numbers. 460 million bushel carryout for soybeans. When we started this process here, you were factoring over a 1 billion bushel carryout in soybeans, so a big decrease overall. When you've seen that, you had a bushel per acre decrease in yield to the soybeans, and we're dealing with this big rain snow system moving through a lot of areas, and that could cause some damage to the soybean crop. So there was a lot of positivity going for soybeans right now, but it seemed like they took off a risk-off mentality with the fact that US and China are meeting right now. Early morning rumors were that China was only staying for 1 day, not their 2 days, and things weren't going well because we are not interested in a partial deal. But later on, President Trump tweeted that he will be meeting with Vice Premier here tomorrow at the White House, so they must be staying around for a little bit. So we'll see what's to come out of that. But the market just decided to take a little bit of a risk-off mentality. Same kind of situation when you look at the meat markets. Think that you would maybe get a little bit of a boost to feeder cattle with corn as low as it is, and then coming in here with the issues you have with this system moving through for storm in South Dakota and North Dakota. But really, it was very quiet when you look at cattle markets traded both sides for live cattle. Same situation for feeders. And surprisingly enough, lean hogs down $1 on the day, even though they got some of the largest sales we've ever seen to China for pork out of export sales today, but it just wasn't enough to push this market. Nothing to really note when you look at outside markets. So tomorrow we'll be seeing if we can get kind of a recovery from today's crop report, and then after the close, seeing what managed money did last Tuesday to Tuesday. I do have to close with the disclaimer: trading futures and options involves risk loss and is not suitable for all producers. This is a solicitation. Have a great day.